Hi, I'm Brandy with In the Park Manufactured Home Sales. Welcome to another exciting episode of In the Park with the Experts, the series that's all about asking the questions so you get the answers. In this episode, our owner and dealer, Anne Marie Jones, is interviewing loan specialist John Borer from US Financial Net about all of the financing and mortgage questions we hear regularly from our buyers. Check it out and make sure to like and subscribe to become a more educated buyer today.
So John, tell me a little bit about US Financial. What do you guys do here?
Yes, US Financial is a manufactured home broker specializing in chattel financing since 1988.
What is chattel financing?
Chattel financing is the financing of a manufactured home on property where you do not own the land that the home sits on.
Are you able to do both?
Yes.
Okay.
90% of our financing is for manufactured homes in parks. The other 10% takes place for homes that are sitting on land home parks, which could be a park where you own the individual lot that the home sits on, a condo park, or a co-op park. We also have financing available for manufactured home on plots of land that do not fit conventional financing guidelines.
I love your office. Tell me a little bit about your team.
Yes, we're a small family business here. We work very well together. Been in the industry for almost 40 years here in San Juan Capistrano, specializing specifically in this industry.
Okay. Can you tell me a little bit about why a finance company like US Financial is important to the whole process to a buyer?
Yes, absolutely. So manufactured homes in general is a niche market, and it is important to have somebody that specializes in this industry. Whether you're working with a sales agent like In the Park Sales or US Financial Network, we have been in this industry and have tried to establish relationships and knowledge specific to this market. So you're gonna, by coming to US Financial Network, you're going to have somebody that is an expert in this field and be able to walk you through that process.
That's a great answer. And what leads me into the next question is, you mentioned manufactured home in the niche. What is the difference between a manufactured home loan and a traditional stick and brick loan, the similarities and the differences?
Right. So coming back to chattel financing, this is a home where you do not own the land that the home specifically sits on. Because of this, we see a constrained amount of financing available in the market. The reason being is that these loans do not have government backing like you see for conventional type of financing. With that, we see a handful of lenders available in this industry that are providing 99% of the financing available. These loans turn out to be higher risk because if a borrower defaults on a loan, that bank is going to be responsible 100% for any additional costs that may occur. And because of that, we see this little market that is much different than you would see for buying a condo or a single family residence.
Well, we appreciate US Financial being part of that tiny group of people that do it. It's a pleasure to work with you guys for sure. What does it take to qualify for a manufactured home?
Yeah, so the process for qualifying for a manufactured home is going to be pretty similar to that as qualifying for a single family residence or a condo. The main difference being that we have to tie in space rent when we're qualifying a borrower. Mm-hmm. So that will be considered when we're looking at your debt to income ratio. But the process itself is going to be very similar. Providing a completed loan application and applicable income documentation is going to help us be able to work on that pre-approval letter.
So you mentioned something about space rent being incorporated into the loan, the debt to income ratio. So while they haven't absorbed it, you just want to make sure that the people applying, the buyer, is comfortable with the payment to reflect what that space rent is. With that being said, do parks differ? So if the space rent is different in one park than another and the person decides to move to another location or get qualified for a different property than they originally did, does that affect the loan in any way?
Yes, absolutely. Great question. So we can approve our customers in two different scenarios. One would be a generic pre-approval letter, where we ask the borrower a question of how much in a dollar amount they have available for a down payment. We can then come back and tell that borrower how much they can afford in terms of a sales price of the home, as well as a mortgage payment and space rent combined. That will allow you to shop from park to park and be with your agent and stay within that budget.
So once a buyer identifies the property, then they come back to you and say, okay, now we have identified. Then is there additional information that's needed in order to then qualify based on that park itself?
Correct, yeah. So that would be the second scenario where we are qualifying on a specific property. The year of the home, the space rent, and the community itself will all play into the financing programs that are available.
So with that being said, tell me a little bit about how credit score impacts the difference based on space rent and the buyer.
Absolutely. So credit score is going to play a huge role in the programs that are available for you. We do have financing available for all tiers of credit, ranging from the low 500s up until the 800s. The main difference there is going to be, it's going to determine what the equity position of the loan is going to require. And by that, I mean the down payment. Usually with a score into the 500s, 20 to 35% down payment will be required to obtain an approval.
Okay, that's interesting. So that's really good news for the buyer who may have been affected by COVID or work or a number of factors. For that particular buyer, any buyer starting on their journey, and they've partnered with a qualified HCD licensed manufactured home agent, and then they also partner with U.S. Financial. How do they start their journey? What do you recommend for the buyer's agent and the buyer?
Absolutely, great question. So if somebody is looking to start this process, journey of purchasing a home, this is a huge life decision. And I recommend beginning that process a little before you actually start shopping for a home. Begin checking your credit. See if there is any small credit card debt that you could pay off, collections, things that would improve your credit score. This will help you obtain a better rate that may be for the next 20 to 25 years. So starting early, taking care of some small issues might help you save thousands and thousands of dollars in the long run. I also recommend being okay to shop within your budget. It is common that we see applicants continue to raise that price range that they were going to shop in, and then that would make them be really stretched in terms of the overall budget. So working with your sales agent, working with your loan officer to determine a realistic budget that you can afford will play big into your part of looking for homes that you will be comfortable in.
And with that, it really is a team effort. It's you and I working together, and it's us educating the buyer. So while your terms are generous, let's talk about the buyer that is denied for whatever reason. How is U.S. Financial and a company like mine in the Park Manufactured Homes working together to educate that buyer to make them comfortable to come back to us and continue their journey?
Yes, great question. So this is something that we look at and deal with on a day-to-day basis. A lot of borrowers will be denied for a specific home or for a generic pre-qualification for a variety of reasons. This could be credit. This could be lack of income. This could be unable to obtain park approval or employment issues. So we are going to work with our borrowers closely, whether approved or denied. And if we do obtain a denial, look for outside programs that we might have available that may differ from the reason why we were denied in the first place.
I know for myself, when a buyer is going through that process, they'll call me and say, can I do this? Can I do that? Does U.S. Financial also provide that support?
Absolutely. So our office will give each person a call to see if there might be some income we're missing or debt we may be able to pay off. If there might be somebody else we can add to the loan or a different home we might be able to look at. So our office is going to call each and every person, go over these options with them.
And so I know sometimes that process, looking into someone's financials, there's They could be uneasy about it, maybe sometimes a little embarrassed about it, and that's why we want to encourage. But I really like the fact that while your whole team is great at making people feel comfortable, Cheryl's able to answer some of the tough questions. She's able to calm them, make them feel very comfortable. And so I really appreciate that type of relationship, not only for myself, but for my clients as well. So I just wanted to kind of give that shout out to Cheryl as well.
Yeah, and I want to come back to that. So working with somebody like In the Park Sales and Anne Marie, or working with U.S. Financial, somebody that knows this industry goes a long way. So having those relationships within the communities, within the banks, is going to help us come up with alternative options, alternative solutions that you might not see from somebody that is in a different industry.
Yeah. There's obviously many programs that U.S. Financial offers to buyers. One of the two actually that I really want to touch is the ITIN and the VA loans. I know not all Park accepts VA loans, but there are some programs that kind of fit in that realm. So maybe you could tell us a little bit about both programs independently so that buyers that have those opportunities can expand on looking for homes.
Yes, absolutely. So first, let's go over an ITIN borrower. An ITIN borrower is somebody that does not currently have a valid Social Security card. This does affect the amount of financing programs available. Currently, what I am seeing is if a home is located in Orange County or Riverside County and a borrower has 20% down payment, we do have financing available for a wage earner, somebody that may be a W-2 employee, a self-employed borrower, or a retired applicant. If the home is located outside of Riverside or Orange County, or an applicant has less than 20% down, at this time the only financing we have available is for ITIN borrowers that are self-employed.
Interesting. And you mentioned Riverside and somewhere else, but you really service all of California, correct?
That is correct.
Yeah.
We do have financing available for all of California. However, for ITIN borrowers, it is location specific as the lenders that are available do differ.
Got it.
I wanted to touch quickly on specific programs like VA or first-time homebuyer programs. Unfortunately, at this time, we do not see programs available specifically for VA or first-time homebuyer programs like you would see for conventional type of lending. The reason being, again, comes back to government-backed loans, which we do not see. If you are a veteran at this time, I do recommend reaching out directly to CalVet. They do have a program available for veterans. But while you do apply with CalVet, we also recommend that you apply with us, because there are times that we are able to obtain more competitive terms than CalVet would. So we can look at that scenario to see where you're going to be able to get the best loan for you.
So you talked about a couple different programs, and you talked about your recommendation for even the CalVet, why they're applying for that, to also apply for something else, or with you guys. With that, some people may say, well, I don't want my credit run so many times. Tell us a little bit about how talking to different companies or different programs affects their credit.
Yes, absolutely. So each time that a applicant applies for a loan, that bank or broker is going to pull your credit, which is going to be a complete credit report specifically for a mortgage. This will show up on your credit report as a credit inquiry. Now, it is important to take into consideration that the credit bureaus do factor in that you are out shopping for a loan. So as it will show up on your credit as an inquiry, it is not going to continue to ding your score over and over again as if you were going to go shop for, let's say, furniture and then a car and a mortgage in different industries that might continuously ding your score. If you're shopping for the same type of product, the credit bureaus do take that into consideration, and you won't see your score continue to drop significantly like you might in other situations.
Interesting. So there are people who are very excited about being able to buy a home, and sometimes they put the cart before the horse. With that being said, if a buyer is not pre-qualified and they have an agent, or they went into an open house and they're excited about the property and they write an offer, from that, how quickly can U.S. Financial get them pre-qualified or qualified in order for them to know if this home is right for them?
Yes, absolutely. So this is a great question again, and this is a huge life decision for each and every one of us going out to try and purchase a home. It's one of the most important decisions that you will make in your life. So it is important that you work with your sales agent, your loan officer, to get all the information that you feel necessary. Once we have a completed loan application, have all of your questions answered, we will be able to obtain an approval or have an answer for you, usually within 24 to 48 hours.
That's great. That is very good to know. And does U.S. Financial work with the the buyer every step of the way?
Yes, this is our bread and butter. So as a small family business, we pride ourselves in our customer service and our relationships with our bank. We are going to utilize our skills to work with you from the first time that you call us with a question to the time that loan funds, and you're going to have those keys set in your hand. That is what we specialize in.
As they're going through the process and they're excited and they're looking for furniture, what is your recommendation for a buyer that while they're in the process of securing their loan and before closing, not to do?
Yes. So this is a great question again. So this is important to work with your sales agent, to work with your loan officer or your processor to make sure you're not going to take steps that might jeopardize your loan. So going out and accumulating additional debt, taking additional time, or going on trips where you might slow down this process that could result in a change in your loan terms. Talk to your loan officer, your loan processor, each step of the way to make sure that the loan goes as smooth as possible.
So I always tell my clients, don't purchase furniture, don't purchase accessories, don't purchase those new appliances unless you have the ability to pay cash, because that credit will change the dynamics of your debt to income ratio. And so having someone like U.S. Financial be able to tell us and work with us and reiterate what we're telling our clients is a perfect team. And they really feel that security when they're working with us.
Yeah.
So I'm excited about that as well.
This process is going to take 30 to 45 days on average. So if you can hold off on making any large purchases, it'll be in your best interest.
Mm-hmm.
It's happened more than once where I've had an individual go out, purchase a car, make large purchases that have then resulted in their inability to purchase their home.
Yeah, so some people may consider these roadblocks, and for us it's very natural that these are the steps that go along with purchasing a home and the loan process. Obviously there's an inspection, and then after the inspection and everything is approved, underwriting is ready, comes the appraisal. What happens during the appraisal process? What happens when a home does not appraise out?
Yeah. So an appraisal is often misjudged. The reason for an appraisal is specifically and solely for the lender to determine that the collateral meets its requirements. Each lender that we work with when purchasing a resale manufactured home is going to use a full comparable sale appraisal. This is going to look at comparable sales within the community and surrounding like communities to determine a fair market value of the home. If an appraisal does come in short, we really do have 4 different options available at that time. The first option would be, if an appraisal contingency has not been released, to go back to that sales agent or the selling agent. Would that be selling or listing agent? Selling.
It would be a sales agent, yeah, because they could be one and the same.
Okay.
Yeah.
Going back to that sales agent to renegotiate sales price. If the market is hot and you are still interested in purchasing the home at a full price, the next option would be to increase that down payment to cover up the difference between the appraised value and the original agreed upon sales price. The third option would be to meet in the middle. Have the seller come down some in their sales price and you come up some in your down payment. You meet in the middle, we still have a deal. The fourth option is not always available, but is something to consider, is to change the loan to value that your current loan is approved at. This usually does result in a higher interest rate, but can help get a deal done that otherwise might not.
Can an appraisal be done at any time during the process? Meaning, if we don't have park approval, can we do the appraisal?
Yes. So we do recommend that a borrower does have park approval prior to an appraisal, but this is not required. Today's rates for an appraisal range from approximately $365 to $600. So if something were to happen, if an inspection was to come out not to your liking, you were unable to obtain park approval, that cost is going to be non-refundable. Most fees associated with the loan is going to cost you nothing until the home actually is closed, the loan is funded. At that time, some of the fees will be paid. But an appraisal is paid directly to the appraiser and is non-refundable.
It is very exciting for a buyer to hear the appraiser reflect what the value of the home is. But as a dealer, how I train my salespeople, there is a process. And yes, there are so many fees involved in this that you don't want to have your client paying for the inspection and the approval, or the inspection and the appraisal prior to getting park approval, because you're right, those costs are lost. And so they feel confident when you tell them, hey, I'm going to try to save you some money, or I'm going to try to save you the process, so they don't have to be wasteful and then go to the next property and do that. So with that being said, for mobile and manufactured homes and clients who have a home inspection, is there anything on an inspection that would stop a loan process?
While we do not require a home inspection, it is recommended to work with your sales agent to determine if it is in your best interest to receive one. Now, if an appraisal is done, the main things that appraiser is going to look at is health and safety issues. If the appraiser comes in and there's water damage on the roof, if the floors might have soft spots, some of those would be required to be fixed prior to us funding the home. Again, this comes back to health and safety issues.
Well, this is a lot of good information, and I really, really do appreciate you taking your time. Is there anything else that we may have missed that you would recommend to a salesperson or a buyer on this whole process?
First and foremost, reach out to your sales agent, to your loan officer or processor with any questions you may have. We want to help you feel comfortable through this process, as it can be a stressful one. There's a lot of moving parts, a lot of different parties involved: appraisers, inspectors, agents, loan processors, funders, so titling. So working with each and every person that might be able to help you during that process, take advantage of that. That is what we're here for. Pick up the phone, call us, send us an email. We're here for you each and every step of the way. Purchasing a manufactured home is quite a bit different than purchasing a stick-built home or a condo. So utilizing industry professionals that specialize in this market is going to help ease your way through the process. We are knowledgeable about each and every step, so utilize us as you make your way through the process.
And the type of agent that specializes in mobile and manufactured homes is an HCD agent, and an HCD agent is licensed through the Department of Housing and Community Development. So our training, our education is specifically for mobile and manufactured homes. Even the vendors that we use outside of our services, like our inspectors, our handyman, all know the dynamics and how a manufactured home is built and works, so that way nothing is ever missed. So I do appreciate you giving us this time. And can you tell us what your website is, and your phone number if people want to get in contact with you?
Absolutely. So again, I'm from US Financial Network. You can visit our website, www.usfinancialnet.com. There's some additional information on our website, the ability to apply online. Or if you have any questions, feel free to just pick up the phone and give us a call, 800-655-9044.
And if you're looking for a qualified HCD agent, definitely give In the Park Manufactured Homes a call. And our phone number is 714-642-9226. Thank you so much. I really appreciate it. That was great. Yeah, thank you. So I want to thank John and the entire U.S. Financial team for allowing us to do this today. Thank you so much, guys.
You're welcome.
Thank you, Anne Marie.
Oh.